The Central Bank of Kenya is urging commercial banks to adopt the new risk-based pricing framework known as KESONIA. The regulator says the model will make loan pricing more transparent and fair to borrowers. On their part, bankers through the Kenya Bank Association says they are committed to increasing transparency while maintaining lending to customers. Dennis Otieno reports.
At the opening of the 14th Annual Banking Research Conference in Nairobi, the central bank renewed its call for lenders to implement the new risk-based pricing model.
In light of the ongoing reduction in the CBK policy rate, it is my expectation that banks will further reduce their lending rates so that credit to the private sector can increase. This framework is not about controlling interest rates. We all know the impact of controlling interest rate. We have tried it before.
The new model, which came into effect on 1st September this year, lets banks set loan interest rates based on how risky a borrower is. Customers with good repayment records get lower rates, while riskier borrowers may pay higher rates, all under the central bank's transparent KESONIA framework, which stands for the Kenya Shilling Overnight Interbank Average.
I do believe that Kenyans prefer this kind of a transparent way of setting interest rates. And if I were a CEO of a bank, I would move as quickly as possible to implement this framework.
Industry players say the reforms will improve access to credit for small and medium-sized enterprises, but stress the need for a balance to ensure sustainability.
We've agreed it's a collective, isn't it? We want transparency, right? But we also want to increase lending to private sector. We're just saying there's transparency because risk-based pricing brought that transparency. But we also have to transmit monetary policy decisions.
We have given our commitment to really lend our hand on MSMEs, and we had given a commitment that this year we'll double what we did in 2024, which was 25 billion to these micro and small businesses.
Earlier this month, the central bank began on-site inspections to identify lenders breaching the new pricing model. Banks in the country, however, have a 6-month grace period to comply. How quickly they do so remains to be seen. Dennis Otieno, Citizen TV, Nairobi.